Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, and when you tune into my show, you're going to hear about topics that are important to the home business community. All right, today we are talking about 5 audit red flags going into 2020. Okay, there are some of these you'll know, and some of these might be new. All right, so number 5. Ding, ding, ding. All right, amending your taxes after obtaining a mortgage. All right, so there is absolutely nothing wrong with amending your taxes. Okay, you amend your taxes because there is a mistake. However, if you amend your taxes, like going back and amending 3 years worth of taxes after you obtain a mortgage loan in order to claim those expenses that you didn't claim to get a refund, that is something wrong, okay? Because you either lied on the taxes or you lied on the mortgage application. Both of those are felonies, all right? So, it has already been shown. I was reading this study that's showing that mortgage fraud is on the rise, okay? And so this is one of the telltale ways to determine if you have committed mortgage fraud. They go back and look at those tax returns like, oh, you've amended those tax returns, so based on what you recently filed, that company may not have approved that loan based on your amended amount, okay? So if you are planning to buy a home, if you are completely self-employed and this is where your income is coming from and it's funding your lifestyle, be prepared to pay taxes because you're going to need to be able to show profit enough to obtain that mortgage. But just know that if you turn around and go back and amend those taxes afterward, and you get busted, then yeah, you can get in a whole lot of trouble for that. And so there was somebody that left a comment previously that said, oh, it's not such as big a deal as you make it sound. No, it's not a big deal until you get caught. And then when you get caught, then it's going to be a really big deal, okay? So that's number 5. Number 4, excessive business losses. Okay, this is not new. So, when you hear about the IRS determining whether you have a business or a hobby, they're going to be looking at your tax returns. They base that off of, did you make a profit 3 out of 5 years? So if you have filed nothing but business losses, 3 years in a row, now that's going to start to raise some eyebrows. Does that mean that you have a hobby? Not necessarily. And the reason I say that is because, year 1, you may lose 15,000. Year 2, you may have only lost 4,000. Year 3, you may have only lost 1,000. You see progression of getting better. But if you're consistently showing these large amounts of losses on your Schedule C, on your business return, people call it a business return, but it's not. It's a Schedule C on your personal return. But anywho, if you're continually showing these losses, then that is going to raise red flags at the IRS because they're saying, hey, how is it that you can have these excessive business losses and still be in business? And so then you're going to get this nice little letter in the mail that says, hey, can we get some more information or can you send us receipts or whatever to substantiate these expenses? Now, the main places that they're going to look is excessive vehicle expenses, usually in mileage. Listen, mileage is the first place that they look to see why is it that you have all of these vehicle deductions? Okay, why do you have this excessive vehicle deduction? And because people do it, people will put any kind of number in there because that's like the highest paying deduction. It's for 2019 is 58 cents a mile. So yeah, that's the first place they're going to look. They're also going to look and see if you have excessive travel expenses, like, because everybody's talking about, oh, you can just go on vacation and turn that into a business trip. That is a lie. If you're going on a business trip, go on a business trip. If you're going on vacay, go on vacay. Don't be sitting up here trying to turn your vacation into a business trip. If the initial intent is not business, then it is vacay. All right, just so you know. which leads to the third one. And my number 3 is excessive miscellaneous expenses. And so what that means is on your Schedule C, there is a miscellaneous line, okay? And so if you've got a big, huge number in the miscellaneous line, that is going to raise a red flag. Why? Because they want to know, why is that number so big compared to the rest of the return, right? So you want to definitely give as much detail in those miscellaneous expenses. Don't just throw some huge number in there, because then, if you get audited, they're going to want to know a detail of what's in that number, okay? So at least I know in my software, there's lots and lots of lines for detailed expenses. So when my clients come to me and there are expenses that go in the other category, it is detailed specifically what that is, so that there is no question when the IRS looks at that return. But if you've got, $10,000 and it's a round number sitting in miscellaneous expenses, the IRS is going to go, yeah, we'd like to know what's in that $10,000, okay? So, detail those expenses and categorize them properly, right? Don't just go throw all of your expenses in miscellaneous. If you got advertising, put it in advertising. If you've got, contractor fees, bank fees, put them where they belong. Don't just lump it all in to miscellaneous expenses, all right? Number 2, this is where it starts to get real interesting. QBI deduction, the Qualified Business Income Deduction. All right, so with the Tax Cuts and Jobs Act, that's where the QBI, Qualified Business Income Deduction, Section 199A, that's where this deduction was born, where business owners get up to a 20% reduction in their profit that they don't have to pay taxes on. Now, the IRS has already said that they're going to be auditing this QBI. So if you should have claimed to have a qualified business income deduction, and really this only counts when you start getting into amounts that exceed the threshold where the QBI deduction starts to go down. Okay. So, but here's the thing that did not make the news. Okay. And this is where we're talking about the specified service trader business, by the way. If you're in a specified service trader business and you exceed certain thresholds, then your QBI deduction starts to go down and it phases out until it gets phased out completely. Now, here's the part that did not make the news: the substantial underpayment penalty. So normally you have, if your understatement exceeds 10% of the tax that should be shown on the tax return, or $5,000, the greater of those two, okay, then you'll get a substantial underpayment penalty. However, if you claim the QBI, the Section 19A Qualified Business Income Deduction, that threshold is cut in half to 5%. Okay, so you got a lower bar before you get into the substantial underpayment penalty when you claim the QBI deduction. That part did not make the news, and it was buried deep in the code. Okay, yes, I read it. I'm a nerd like that. All right. All right, so that's QBI. The number 1, cryptocurrency. Okay, number 1 red flag for going into 2020 is cryptocurrency not reporting those gains. So the IRS has already started sending out notices, right? I want to say starting in July, August, they started sending out letters to people that they had in their database that were cryptocurrency users. What you may have bought cryptocurrency, sold cryptocurrency, whatever. You got a letter reminding you of what your reporting requirements were, or what they are, okay? So that if you got one of those letters, that means you have popped up on their radar and they're watching, okay? So here's the deal. Now, if you purchased cryptocurrency only, if all you did was buy and you're a holder and all that, there is nothing to report. Okay, if all you did was purchase cryptocurrency, you haven't sold it, traded anything, you're just holding on to that baby for dear life, then there is nothing for you to report. But If you received cryptocurrency as a payment, you need to report that as income. If you sell cryptocurrency, if you cash it out, so if you buy cryptocurrency, you hold it, it grows, and you cash it out, that counts as a sale. Then you need to report that transaction. You need to report the gains. If you buy something with cryptocurrency, you need to report that, because when you purchased the cryptocurrency, it was worth one amount. When you sold it, it was worth something else. So you need to report that. If you trade one cryptocurrency for another, if you trade your Ethereum for Ripple and all this other stuff, there's a gazillion cryptocurrencies out there, but if you trade one for another, that counts as a sale. It must be reported. If you hold cryptocurrency on foreign platforms like Binance, for instance, in which Binance, by the way, they're supposed to be opening up a platform here in the US. I don't know if that's done yet, but I just know it's coming. But anywho, if you're holding it in Binance proper, in Malta, or any other type of foreign exchange, then you have to report that regardless of whether or not you buy or sell. You may have foreign reporting requirements. So it's up to you to know whether or not you meet that threshold. And if you don't, you need to schedule a consult so we can find out what you got going on. But also, the IRS is asking about cryptocurrency when we're handling tax debt. So when you're filling out the income forms and you're trying to settle a tax debt, whether it's an offer in compromise or whatever, they're asking on those forms whether or not you have cryptocurrency. Please do not lie. Do not lie on those forms about cryptocurrency or any other type of income, because if you get found out, you're going to be in worse trouble than before. Okay. So, all of these things are, things that are in the home business industry. Okay. You can have people in the home business industry. You might have a t-shirt business and you're dabbling in cryptocurrency. Everybody is involved in cryptocurrency in one form or another, whether you are a trader, you might buy and hold or whatever. There are so many people across so many industries that are involved in cryptocurrency. Just know that you need to know your reporting requirements. And if you hold cryptocurrency in a foreign exchange, whether it's in the UK, if it's in Europe, I don't care where it is. If you are a United States citizen, and I don't care whether you live in the US or not, if you hold US citizenship, you are required to report your income, cryptocurrency, whatever, worldwide. It doesn't matter where you make it, doesn't matter where you hold it. That is the requirement. Okay, so I want to make sure that's clear. So, all right, so that's it. That's my top 5 for audit red flags going into 2020. Okay, the IRS is stepping up their game. They might be slow. They're not stupid, but they might be slow. Okay, just know that. All right, you guys. So thank you so much for tuning into Home Biz Tax Talk. Again, we air Monday through Friday, and you can come right here to get your questions answered about your home business taxes. All right, have a great day, and I will see you all next time. Bye.